All right, we're back. This is the rundown. My name is Andrew Kuhn, Focus Compounding, on air live all the way in Norway. Vetle, Forslag. Vetle, how's it going today?
I am great. How are you?
Doing well, doing well. You're a new man. You're a new employed man, and we're going to talk a little bit about
That's
what you're
true.
doing.
All
But
right.
you've been busy lately. You're busy today. It's your first day with something new, right?
Yeah. I just started my new job as a summer analyst on the buy side in the financial district of Oslo, I guess we could call it. So I'm excited. I just started working at an insurance company basically that invests all their float, like Berkshire Hathaway. So we're like a small team of 10 people that invests in quality companies and quality stocks. So I'm just living the dream. I just went down to the beach after work, and then tomorrow I'll go to work and I'll just analyze companies and stocks. So it's awesome.
That's
It's great.
wonderful. What type of companies do they focus on?
European quality companies, stable companies with a wide moat and stable earnings, and if you can get some growth, then that's a plus. But they basically want to invest in quality companies and hold them over time.
Yeah. Do they know that
Yeah,
you're the co-host of the number one rundown finance talk show on YouTube?
I'll make sure they'll know by the end of this week. I'll make sure they'll know.
Wonderful. Cool. Well, the first thing we got to go over, Vetla, a lot of stuff's
Yeah.
going on. A lot of stuff is changing in the markets every single day. First thing that we want to hit on, 1 trillion infrastructure deal is being talked about.
Mhm.
Trump is considering launching a $1 trillion infrastructure stimulus plan, according to Bloomberg. Bloomberg said that most of the funds would go to infrastructure work in roads and bridges, and the rest of the funds would be devoted to improving 5G and rural broadband, confidential sources say.
Okay.
So that's from a Bloomberg article. There's been a lot of people talking about if we are going to do some sort of infrastructure stimulus plan all through like the shutdown. You
Hmm.
would have thought that we would have heard about it maybe a couple weeks ago or maybe a couple months ago when all that was starting, just to whatever. That's what Bill Ackman was talking about when he was on CNBC, right?
Yeah.
And he was
Right.
tweeting
Yeah.
about it, that would be
Hmm.
a perfect time for United States to do that. But sounds like he is considering it. And
Hmm.
you said that you have a bull case for dry bulk stocks.
Yeah. Well,
Tell me
first
about
of
it.
all, I just want to say that, I I don't expect this infrastructure deal to go through at all because this is like the fourth time Trump has talked about some infrastructure thing. Anyways, so this is just like this just adds to the bull case for dry bulk stocks, for dry bulk shipping.
Mm-hmm.
So the time charter rates for dry bulk shipping ships this year has been horrible. Most of them have lost a lot of money
Yeah.
because the activity in the economy has not been very high, and people do not travel as or the goods do not travel too much, and trade has not been that good. But there are several reasons for that. First of all, it's Corona, of course, which is a temporary problem. And second of all, I think it's the Vetle mine thing in Brazil was shut down for regulatory reasons because a bunch of people got killed over there. But that mine is starting up again this fall, which will lead to like a surge of demand for dry bulk
Yeah.
shipping. So, and at the same time, China has signaled that they will increase their infrastructure spending and they'll do a lot more trade. And now Trump is talking about doing some infrastructure deal. Europe is definitely interested in doing something like that because they want to keep the European Union going. So it kind of feels like you're going to have a bad year this year for dry bulk stocks, which we've already seen because of Corona, first of all, and the trade war and stuff like that. But then you'll get like a super cycle next year because you got so many investments going on into roads, into building bridges, into building, everything just to get the economy back on track. And, that's just going to lead to a surge of demand for dry bulk ships.
And it'd
And
be good for jobs as well within the economy, employing people, which is
exactly.
good for everything else.
Yeah. And on top of that, 2020 was going to be a good year because the Valet mine in Brazil, I think, was starting to open up. And China was starting to opening up again after Corona in January. And there are some companies there that, at least in Norway, I'm not sure. I don't know any dry bulk stocks outside of Norway. but there's at least one Norwegian dry bulk stocks called 2020 Bulkers, and they basically made money throughout all of this year. They made a profit throughout all of this year, while most dry bulk stocks has lost money because they fixed their time charter rates back in January, because they sort of saw this corona crisis coming. So therefore, they're able to turn a profit this year, and then they'll ride the tide of the great surge in demand for the next year. So I'm kind of bullish on that stock, and I'm really bullish if Trump actually gets that $1 trillion infrastructure deal through. So
it'll be. I'm kind of skeptical too. I mean, he's been pushing for, I think it was $2 trillion infrastructure plan for like most of his presidency. So it'll be interesting to see if he actually gets it through. And, not to get too political on here, because I just don't want to do that. But obviously it is an election year. And it's going to be very interesting to see how that plays out. His scorecard, if you will, was the market. And obviously we know kind of what that has happened. Unemployment's where it's at. Now, obviously a lot of that's COVID, and pre all this, the economy, you can't even argue that it was doing incredibly well. So it's going to be interesting to see how that goes through. But I wonder if, part of this plan is to, kind of plan for the long term, like reelect me, and hopefully that, adds to it. But we'll see what happens,
Yeah.
We'll see what happens. A quick question. What books are you reading recently?
Oh, I actually just started on reading the Super Forecasting book. I never read it.
Nice.
It's like a modern classic.
Yeah.
So I just started reading it. What about you?
I just got this book in today, $1 Billion Lessons.
Nice.
So about big blow-ups. I always talk about my fascination with big blow-ups, and I'm going to talk a little bit more about that later. But this book kind of goes into it, and they dissect, just certain things that went wrong within companies that have had like massive blow-ups, and kind of does like a post-mortem on them. And then if you could see, if you've watched the podcast YouTube version, Geoff gave me all of these books of permanent value. Have you ever heard of these?
Nice.
Of permanent value?
I haven't. I've only seen them in your podcast, but I actually haven't heard about them.
So I've heard of the title before, but I didn't realize that they're like a full-on encyclopedia of Buffett and stuff. And I was talking to Geoff, I was like, I kind of feel like I shouldn't write in these or mark these up, because I feel like this is going to be worth something one day, because I don't even think they have Geoff said that he doesn't even make print versions anymore, I believe.
Oh my God.
So I think it sounds like they just do PDF or whatever, but that's pretty cool. It's like a full-on encyclopedia.
Yeah. So why isn't this book, it seems like more concise than the Snowball. Why isn't this like this huge book that every Buffett fan reads? Because I haven't heard that much about it.
I don't know. The Snowball was more of like a story, right, of his life.
Yeah.
And this is, I don't know, just like everything Buffett, I guess. And there's 3 volumes of it. So it's pretty, and there's so many pictures in here that I haven't seen before. So I'm, quite excited to flip through it and read through it. Look at, it's funny. I don't know if you can see this picture. Hold on, let me see. A bunch of people sitting on his car. And his license plate says Thrifty, and it's like, I don't even know what
Thrifty
driving his old Cadillac. So that's kind of cool though, man. This is a nice awesome. Coffee table book.
Oh yeah, that's a very nice one. Yeah. Exactly.
Anyways,
you need to just tweet out the good pictures.
Yeah, that's what I'm gonna do.
Enjoy them as well. Yeah,
I know. It's interesting. This is the 2010 edition, if anyone is wondering, because a lot of people were commenting on YouTube or DMing me asking what books these were. So he gave them to me. It's Warren Buffett of Permanent Value, and there's 3 volumes of it. So it's pretty sweet. I thought it was an awesome gift by Geoff. Anyways, Zero Hedge, Unbanned, finally. What's going on there? Finally. Tell me about that.
What's going on there? Well, just a quick recap. They were banned back in early February.
On Twitter.
On Twitter, because they posted, or they wrote an article about this Chinese doctor, and they were claiming that he was the man behind the coronavirus, silly thing. And Twitter banned them for posting that article. And if you don't know, Zero Hedge are perma bears. They're always bearish on the market, bearish on the Fed. They hate the Fed. They're always. So they've been and they were created back in 2009 because they were waiting for the next leg down after the financial crisis, which, never came. But they've been around since then, been very popular since then. And even I read it because I like some of their financial stuff. It's very contrarian. So they never got their big crisis. And then they were banned in February. A month after that, as we all know, when the market crashes,
Yeah.
not there to witness it, which I
That,
find so funny. And then they get back at the very top, or
yeah.
I don't know, maybe it's a sign of the top. I don't know.
Yeah, no, is that a sign at the top? I thought it was interesting because I remember thinking when everything was happening,
Mm-hmm.
in February, March, or end of February, March, and April, I remember thinking, man, only if zero hedge wasn't banned, this
Yeah.
is like their perfect,
It's
shining star moment, if you will, and they were banned. But no, that's good. I mean, what are
yeah.
your thoughts on Twitter censoring certain accounts and stuff like that?
Right, right. Well, it's a private company. They can do whatever they want. But, I would prefer social media to just be open to basically everything because it's a slippery slope. Like, I don't think zero hedge should be banned in, any way.
Hmm.
Because, they write some out there stuff, but some of their financial analysis is actually quite good. So I think it's a slippery slope that if you start banning one page, suddenly people are going to call for you to ban this page and then
Yeah.
this page, and then suddenly you have been censoring people that or companies or news sites that shouldn't be censored just because
Hmm.
of that slippery slope. It's very easy to go down that road once you take that first step. And Facebook has gotten a lot of backlash from politicians and from people because they haven't banned anyone, because they think it's a slippery slope and they think they should prioritize freedom over, picking what's hate crime or what's hate speech and what's not hate speech. So, I'm kind of a fan of that early, how can I say this? Like that early dream of the internet of being like this super free place where you could post whatever you want
Yeah.
without any, well, with consequences, of course. If you sell drugs online or whatever, you should get consequences. But I don't think you should get banned from a social media site for posting your views or anything.
Yeah, I would agree. I thought that was kind of crazy when they did it in a bit of a stretch. I
Yeah.
mean, and they do put out, I think, pretty thought-provoking content. I mean, for the most part, it's
Yeah.
not like anything that's so insane. No, I thought they're one of my favorite accounts on Twitter, actually.
Yeah, me too. They're
Um,
a lot of fun.
yeah, so
I
they're always
read
great
through
stuff.
Hedge like a lot of the time, and I skip most of the articles because there's a lot of bullshit there. Just a lot of things that are just super out there, just
Yeah.
basically conspiracy theories. But you need a contrarian voice even in financial media, and I think they're
Hmm.
good at that. So I like them.
Yeah. It kind of leads me to this next topic that I wanted to talk about, which is like investigative analysis. And you were a journalist, you were a financial journalist, now you're acting as an analyst.
Yeah.
And this is something that I've been spending a lot more time on. Somebody the other day on the podcast when we were doing a Q&A, they asked how much of my influence or how much of my own investing style has been influenced by Geoff. And
Mm.
obviously, tons of it has been, but I was also talking about how doing scuttlebutt has been so beneficial for me in learning, I guess this theory I've learned from Geoff and then really applying it to like this real world business. And I tend to really think about myself, what I'm currently doing is almost like an investigative journalist or a financial journalist.
Mm.
And for, some time, we have focused compounding, we have focused compounding capital management. There's like so many different parts to, I guess, this brand focused compounding that we have, where I was always like, what role can I play on the investing side? Because obviously I'm not Geoff, and Geoff
Mm.
spends 100% of his time focused on that. But how can I, still be able to help him on that side? Even though like the marketing side and everything else, I spend, majority of my time on. And one thing that we, have been doing is a lot of times he does like the early research on companies to see if it's something that he'd be even interested in. And
Mm.
then he has some questions that he'll give to me that I go and try to figure out, whether that's, talking to CEOs, talking to other investors, doing scuttlebutt.
Mm.
When I was in the Midwest, I was visiting a bunch of franchisees, talking to them, trying to get answers to these questions that he has. So this whole topic of being like an investigative journalist or whatever is something that's like quite fascinating to me.
Yeah.
And it actually fits my personality, I think, quite well, because I've always talked about, in the beginning, I was talking about how I'm obsessed with blowups. And I've talked a lot
Nice.
about on the podcast how I think short sellers are fascinating because I think they're
Mm-hmm.
cynics. I think they're incredibly smart. I think their
Yeah.
research is awesome.
Yeah.
Almost like being a detective. So that's
Exactly.
something that,
Have you seen Dirty Money on Netflix?
yeah,
Have
it's
you?
incredible.
Yeah.
Yeah, I
Have
love
you
it.
seen that first season, episode 2 or something? Is about short sellers.
Was that with Bill Ackman?
Yes, but he's acting as the villain in that one. He's not
Yeah,
the short seller.
that one.
Yeah,
Yeah,
he's not the
yeah,
short seller, but yes, it's
yeah,
with Bill Ackman. Yeah,
yeah,
I didn't mean to interrupt you, but I thought that was like such an awesome portrait of a short seller, where you
yeah.
see how cynical many of them are,
Hmm.
how deep they dive into the cases.
I love it.
Yeah,
Like to me, it
fascinating.
fits perfectly because Jeff does, a lot of the early research, and then he may have certain questions and he gives it to me, or he'll say these two companies or these three companies are our highest priority to you basically figure out absolutely everything that you possibly can about this situation. So
Mm-hmm.
it like fits what I'd love to do, quite honestly, and just my personality just perfectly. And
Nice.
I've loved like Bethany, I think is it McLean, and she wrote Smartest Guys in the Room, and she actually was just
Mm,
on Shane Parrish's podcast about crafting the narrative as a journalist. So I've been studying a lot of journalists recently on
nice.
how they think and
Yeah.
how they go deeper and how they peel the onion back and stuff like that. So it's just been, kind of cool. But I was curious to hear about your experience because you've done scuttlebutt as well. We're going on a
Yeah.
trip here next Monday. We're going to be gone for like 2 weeks. It could be
Oh
a little
wow.
bit more than that. So it's gonna be a long trip. But I'm curious to hear about your experience, speaking with
Yeah.
CEOs and doing scuttlebutt and stuff like that.
Right. First of all, do you want to say what companies you're visiting, or is that confidential?
It's confidential, man. Come on.
Nice. Very nice. All right. Well, yeah, I've been a journalist for a year and a half or 2 years or something. But like the first thing I kind of want to say is that like I wasn't an investigative journalist. I wasn't like digging throughout the scandals of Norwegian banks and finding out what was going on behind the shadows. I was more of a reporter of sorts. But there's still like a lot of similarities there. Like first of all, one of the things that you kind of forget when making like a write-up or when you pitch a stock or something is that you need to back everything up with facts, which is similar to what you got to do as a journalist. Like you can't make any assumptions when you're writing an article. So when you write an article about some event, you have to call an expert. You have to call an investor who knows what he's talking about, ask them what their thoughts are, write down their thoughts and write what they think about, the market or a company or a scandal or something like that. I could not write as a journalist like I think this happened or this just happened because of X or Y. I had to call somebody and I had to ask them, so what happened? And they would say, well, I think X happened because of this, this, and this. And you can make like sort of a connection there with investing, like in that while you have to make assumptions, you need some sort of a source for all of your assumptions. You need to back up your claims with something. So you call the management or you call the customers and you ask them questions about parts of a business or parts of a company that you won't get from the annual report or the earnings call or the 10Q or something like that. So and it's kind of the same way as a journalist. If you're writing an article about an event that happened to a company, you can't just write the press release. That's not enough. You have to call the CEO and then call the parties involved and ask them, so what happened there? And they'll tell you most of the time. And it's the same way when you're an investor. Like you won't get the full picture if you just read a press release. And of course, that's a bad example because the press releases are usually not the ones that are, materially impacting the future cash flows. But if there's something you're unsure about, the best ways to call the business and listen to their thoughts and kind of get their perspective on things and how they think about many parts of the business that you can't really read in an annual report. Like
Hmm.
I actually got a call tomorrow actually with a company or with the management of a company. And I have a bunch of questions about, their research and development spending, their SG&A spending, and, how their customers treat their products and just basic scuttlebutt things that you need to dig deep. You need to like dig deep to find out those sorts of stuff. You have to call somebody that knows what you're talking about. You just can't read it from the annual report. So sort of went out on a rant there, but basically you gotta, I think it's very useful to call somebody.
Mm-hmm.
Call somebody that knows what they're talking about.
Do you feel like it helps take the stock out of the business when you do scuttlebutt like that? Like it reaffirms that you're investing in a real business as opposed to just this piece of paper that flashes on a screen all day.
Yeah, I think that's also one of, investors, including me, one of our biggest flaws is that we're looking at it as a stock. And, if you talk to the management and you talk about events or you talk about the business, you're going to hear their side of the story, and you're going to hear that they are focused on things that you might not be focused on at all. Like if you read a balance sheet and you see this is like a microcap stock, and you see that they have like some property that they own, the yacht or whatever, you're going to think, okay, so this is worth 1 million, this is worth 15 million. And if I add that, then this is that. Mm-hmm. And you might not, think too much about it. But if you call the management or call the CEO and you get him to talk about it, you're going to hear how he views it, how he views his assets. And you're going to start looking at it, not as, just a piece of number that's worth something. You're going to find out what they actually use it for. And you're going to get a much better understanding of the business just by picking up the phone and calling them, at least from my experience.
Yeah, no, I'd agree. And I've been studying a lot, like I said, investigative reporters, short sellers, just the way that they go about doing certain things with research. So it's always been, quite fascinating. So I think it's super cool, to do it. And Peter Lynch as well. I mean, he was on the road, I think 6 days a week, visiting with companies, talking to management, seeing the boots on the ground and doing all sorts of stuff like that. And again, for me, it's just it really affirms, especially in the world that Geoff and I operate in, a lot of investors, they just won't do it. And there's never really any analysts that cover these companies anyways. So we think, just doing the extra legwork and doing the scuttlebutt and visiting these companies in person, seeing it in person and stuff like that, you could just gain an edge from doing that, sort of this quote unquote information edge that a lot of people think has been, sort of arbitraged away in the market. But I think in our experience, there's been so many situations where if you just talk to outside investors or people familiar with the situation, the way that they view it is completely different than the way that we viewed it after, we did our own research and our own scuttlebutt and stuff like that. And maybe we'll write a book about it one day. I wish I could give more specifics.
Yeah,
but
the research trips
we just can't right now.
Kuhn and Gannon.
Yeah, but we're going to be gone for over 2 weeks. We're going to bring the podcast stuff with us. We're going to go record 5 episodes tomorrow for the following week, and then we'll bring the podcast stuff. So wherever we are in the hotel or whatever, we will record it. But yeah, it's fun. I mean, I think research trips are great, and especially for growing as an investor, talking to people familiar with, the company. That's just such a great way to learn about the business. I mean, when I spend time talking to, 20 or whatever franchisees, you get a pretty good view of the way that they think about corporate and the business in general, but just like the unit economics and stuff like that. You just learn so much about it.
Yeah, and just visiting the company is also a very simple thing to do. It's like the simplest thing, the simplest version of scuttlebutt that you can find.
Yeah.
All you need to do is just walk up to the store or walk up to the company and just look around and talk to the people that are there. And I think you'll learn a lot of new stuff just by doing that. And it's, very simple.
Yeah. So, I've always talked about my favorite ideas are the ones where I could be the customer myself and understand why people are the customer. So whether that's going to, I don't know, Best Buy or using Amazon or eating at a Starbucks, drinking coffee. I mean, just being the customer yourself and just understanding it from that perspective.
These are one of my favorite blog posts of Geoff Gannon of all time. Is when he's talking about, I think he's talking about Pixar. No, DreamWorks. He's talking about DreamWorks, the film producer. And he said that while researching the stock, he went to the movies, or he went to, Blockbuster or whatever he used, and he rented all the movies that Pixar had ever created. So he watched like Toy Story, and he watched like Cars, and he watched all these kids' movies just to figure out what the parts are.
Yeah, and I know he went to, for one former scuttlebutt, he was seeing movies. I forget if it was DreamWorks or what it was, But yeah, going to movie theaters. People don't realize, actually, he talked about it on the podcast, I think last week, that he goes to the movies probably more than once a week. Definitely on average once a week. Yeah. So he's very much like that. He's not big into television as like a leisurely or activity or anything, but he enjoys going to the movies and seeing a movie. Yeah. So if you ever need to get feedback on a movie, he usually has seen it. I'm not even kidding. And that's when he was talking about the whole movie pass thing. He loved it as a customer, but he couldn't figure out
awesome.
how they were gonna make money as a business.
Of course not. Like Movie Pass, it's basically giving people $5 on the street, and you're like, and what you're doing is you're saying, oh, you know what? I got 100,000 customers today, or I got 500 people walk by, and 400 of them took my dollar. Yeah. And all of that is sales. And I feel like what
I was gonna say, it's someone for Geoff that's like a power movie goer. Just like, he's like their worst enemy.
Exactly. Yeah. If I can just make a quick comment about that, I think that you can make a lot of connections between like Movie Pass and a lot of the, what they're called, the unicorn tech companies of the 21st century, in that all they care about is sales and revenue growth and just growing and growing and just growing endlessly. And when you really think about it, growth is very simple. It's very easy to grow. All you need is just to give some or offer something at a low enough price, and people are going to buy it, or they're going to try it, and you can bill it as a sale. But the hard part is making money from it.
Yeah.
So, if I wanted to, I could make a company grow 50% a year, every year for 10 years, if I had an endless amount of capital. And I think that a lot of these companies with, powerful VCs backing them has this endless amount of capital. So they're able to grow endlessly and just lose more and more money every year and never make a profit. Anyways, just wanted to say that. And it's kind of connected to Movie Pass. Movie Pass would never work in any universe ever, because it just was fundamentally a bad idea. They were giving away $1 for 50 cents. They were like reverse value investors.
Yeah. And people always talk about Amazon being unprofitable, but they've generated free cash flow. So maybe on a GAAP basis, they've been unprofitable, but they have generated free cash flow for a very long time. Yeah.
That's different. Yeah.
Cool. Well, that's all I got for today, Vetle. Do you have anything else to add on our conversation?
Not really.
Everybody, make sure you hit that subscribe button. Check out this book. I really do enjoy it so far. I'm like 2 chapters in, but if you like blow-ups like me and sort of deciphering what happened and doing a post-mortem on it, this book goes over its $1 billion lessons. The other books that I talked about was Of Permanent Value. And then what did you say you just started reading? Super Forecasting? I think Charlie Munger recommended that book.
Oh, really? Yeah, it's like a modern classic, I think. It's I just started reading it. I read like 30 pages this morning, and it was off to a great start. Can't wait to read it.
Cool. Well, I want to thank everybody so much for tuning in. Vetle and myself, we will see you in a few days on the Rundown. Make sure you follow Vetle on Twitter. His information is in the show notes, and we will see you in the next Rundown.